All right. So, you sent over that article from The Motley Fool.
Uh-huh.
Yeah, the one about tech's next golden age.
Right, right.
And it really caught my eye. 3 reasons. The Vanguard S&P 500 ETF is a must-buy right now. So I thought for this deep dive, let's really break this down, see what the author's getting at. Not just what they're saying, but why they're so bullish and, why they think VOO is the ticket to ride this potential wave.
Yeah, no, I think that's smart. And, it is kind of interesting timing with all the market stuff going on.
Yeah.
Like, the article mentions the S&P is projected to be up 10% this year?
10%, yeah.
But, it's already dipped a bit, like 1.6% in these first few months. So, some folks are understandably getting a little hesitant.
Totally. And the article even points out, a lot of this cautiousness seems to be coming from concerns about trade policy shifting, maybe more protectionist moves. And then, of course, there's always the budget talks and, concerns about government spending and stuff. It's like everyone's kind of looking for the safest place to park their money right now, international markets, bonds, even gold and, plain cash.
Yeah, exactly.
Okay.
Like batten down the hatches. But, that's kind of the whole point the article's trying to make, right? That maybe all this caution, this nervousness is causing people to miss the bigger picture.
Mm-hmm.
The author's calling it a generational opportunity. And they're basing it all on this idea that there are 3, really massive technological forces converging right now that could kind of kick off a whole new boom in the U.S. economy. Potentially bigger than any of these short-term jitters people are worried about.
Okay, so let's get into these 3 big technological pillars the article is built on. So first up is artificial intelligence, AI. And the article is making a pretty strong case that the Vanguard S&P 500 ETF has a lot of skin in the game here, right? A third of its holdings are in big tech players, the obvious ones. Nvidia, Microsoft, Apple, all deeply involved in the AI world.
Absolutely. And it's fascinating. The sheer size of the economic impact that's being predicted for AI is mind-blowing.
Yeah.
The article throws out some numbers that are just, wow. Goldman Sachs, for example, estimates AI will boost global GDP by $7 trillion in the next decade. That's a 7% jump. And then you've got McKinsey & Co. They're saying it could be even bigger, 17 to 26 trillion a year. And some analysts even think those numbers are lowballing it.
Yeah, that's huge. And I mean, it's not just about the overall economic growth, is that the article talks about how AI is poised to completely change the way we work. The IMF, the International Monetary Fund, they found that almost 40% of jobs worldwide could be affected by AI. That's a massive shift with, the potential for huge productivity gains across a whole range of industries. And the article really emphasizes that we're just seeing the tip of the iceberg with AI right now.
Right, exactly. And that's where the article makes a pretty compelling argument for the broad reach of the Vanguard S&P 500 ETFs, right? You contrast it with, some of those more specialized funds that just focus on one very specific part of the AI chain. But because VOO tracks the whole S&P 500, it gives you exposure to that whole AI ecosystem, So it's not just the chip makers building those crazy powerful processors or the software companies that are integrating AI into everything, but it's also all the businesses in every sector that are using AI tools and AI processes to boost their own productivity. It's a much more integrated way to play the AI game, if you will.
I like that. The AI ecosystem is not just picking one horse in the race, it's betting on the whole racetrack, basically.
Yeah, exactly.
Okay, cool. So that's AI. Now, what about this second big force the article talks about, advanced robotics? The author saying this could be even more transformative than the assembly line. That's a pretty bold claim, right?
Oh yeah, that's a big one. And the article backs it up by talking about how fast robots are being adopted in manufacturing. It's actually happening even faster than people expected, especially in places like China, South Korea, those big manufacturing hubs. They cite research from Oxford Economics, and their projections are 20 million manufacturing jobs globally could be displaced by robots by 2030. But the point they make, and I think it's a really important one, is that it's not just about cutting labor costs. It's about the huge, order of magnitude jumps in efficiency and output that these advanced robots can bring to the table.
And this is where it gets really interesting to me, right? The article talks about how AI is actually changing what robots can do. Fundamentally, there are some pretty wild examples in there, like those robots they're developing at Carnegie Mellon that can do parkour and navigate all these complex environments without needing specific pre-programmed instructions. It's something out of a a sci-fi movie.
Yeah, totally. It's like the robots are learning. And the article mentions another cool example at the Toyota Research Institute. They're training robots to do all sorts of practical tasks just by like showing them how to do it, like human demonstration. And that kind of learning capability, it's really speeding up how quickly these robots can be like deployed in the real world, doing real jobs. And it's not just factories anymore, right? They're talking about robots in the service sector, in logistics, in healthcare, even in customer service roles.
So kind of like the AI argument, the article is saying that that companies in the S&P 500 are going to benefit from this robot revolution in two ways. One, they're developing the technology, right, the hardware, the software, all that. And two, they're going to be using these robots to like streamline their own operations and, get that competitive edge.
Yeah, exactly. And the Vanguard S&P 500 ETF, again, is positioned as like a way to invest in this whole evolving robotics landscape. You get the companies building the robots and you get the companies using the robots, from design to deployment. It's a pretty broad way to participate in this whole industrial shift.
All right, so last but definitely not least, let's talk about the third big tech frontier the article explores, quantum computing. This always feels like the most mind-bending, the most potentially disruptive of them all. And the article's saying it's moving fast, going from like theory to actual real-world applications.
It is, and the potential economic impact is like massive. McKinsey & Co. projects that quantum technologies could generate something like $2 trillion in value over the next decade.
Yeah.
And what's interesting is they're saying that these benefits are going to be concentrated in some pretty key sectors like chemicals, finance, life sciences, transportation. And the timeline is like surprisingly near term. Major consulting firms are saying businesses could actually start seeing profits from quantum computing like this year.
Wow, that's a lot sooner than I would have guessed. And the article gives some good examples of like how this is actually happening, right? Like Mercedes-Benz working with IBM using quantum computing to develop better batteries for electric cars.
Yeah, that's a really concrete example. And in the financial world, you've got Goldman Sachs saying quantum computing is going to lead to like way more accurate market modeling and risk assessment. And then there's the pharmaceutical industry where they're using it to speed up drug development, like way faster simulations of molecular interactions than regular computers can handle.
So once again, the argument for the Vanguard S&P 500 ETF comes up, right? It's not just about investing in those few companies that are like building the quantum computers themselves, but it's about having a stake in all the industries that are going to be early adopters and, really benefit from these quantum leaps.
Right. And the article really stresses that while there might be some more specialized funds that, target specific quantum computing companies, the S&P 500, because it's so broad, gives you exposure to this whole quantum ecosystem. So you're not just betting on one company, you're betting on a whole wave of innovation and application across all these different sectors.
Okay, so big picture time. The main point the article seems to be making is that this convergence of AI, advanced robotics, and quantum computing, it's not just a bunch of like separate tech advances. It's like a genuine turning point.
Yeah.
It's laying the foundation for a whole new era of like economic growth and innovation in the U.S., even with all the uncertainty in the market right now.
Yeah, I think that's a good way to put it. It's about looking past the short-term noise and focusing on these like really fundamental long-term forces that are going to shape the economy.
And they keep coming back to the Vanguard S&P 500 ETF, right?
Right.
Saying it's a solid way to get exposure to all three of these big trends without having to like pick winners and losers in these fields, which can be, almost impossible.
Exactly. It's about betting on the whole U.S. economy, riding the wave of tech innovation as a whole.
And, there's that whole thing about the ETF's expense ratio, which is like super low, right? 0.03%.
Oh, yeah, it's tiny.
The article makes a big deal about that, saying it's a huge advantage for long-term investors. More of your returns end up in your pocket instead of going to fees.
Mm-hmm.
And over time, that can really add up, especially with compounding.
Absolutely. That low expense ratio is a huge plus, especially for a broad index fund like VOO.
Mm-hmm.
It really helps maximize those long-term gains.
So bottom line, the article's saying that while some folks are getting all nervous and moving their money around, the people who stay invested in the U.S. market through a broad fund like VOO, they could be, the ones who really benefit from this potential tech boom in America.
Yeah, that's a great summary of the article's message. It's a pretty compelling case for taking a long-term view and not getting too spooked by the day-to-day ups and downs.
This has been a really, really interesting deep dive. Thanks for breaking this down with me.
My pleasure. It's always good to explore these big picture ideas.
And of course, thanks to you for sharing the article with us in the first place. So for everyone listening, we've really gone deep on these three big technological forces: AI, advanced robotics, quantum computing. We've looked at why the Motley Fool thinks they could lead to some serious economic growth, and we've explored why they see the Vanguard S&P 500 ETF as like a smart way to invest in all of that.
A diversified approach,
Yeah.
capturing the whole S&P 500, not just the specific companies that are developing these technologies, but also the wider range of businesses that are going to be using them and benefiting from them.
So here's something to think about. Given how big these changes are, AI, robotics, quantum computing, what are some other industries, maybe ones that aren't as obvious, that you think could be like really impacted by all of this in the next few years? Beyond what we talked about today, Think about the ripple effects, how this tech could change society, infrastructure, the whole economy. This is definitely something worth chewing on. Until next time.
Definitely. Food for thought.
All right, see you next time.
See you later.